Next up, we're diving into something that keeps me up at night, the dollar. Not because I'm short it, thankfully, but because what's happening right now is unusual. We've seen a pretty dramatic sell-off in the dollar over the last few months, off 90% drop against major currencies since mid-January. That's not just a little wobble. That's a serious move. And folks are starting to ask if this signals something bigger or plus off faith in the U.S. economy and the dollar's dominance.
Wow, 9% is significant. I always thought the dollar was the currency, like everyone uses it. So, what exactly does it mean when people say off confidence? Is that even possible?
That's a brilliant question. It's like your favorite restaurant, right? You go there for years, trust food, the service. Then suddenly the chef changes, they start using cheaper ingredients. The portions get smaller. Slowly you lose faith. You look for other places to eat. Now replace with United States and with policy. And you begin to see where we are. The dollar's dominance isn't guaranteed by some divine right. It's earned over decades through stability, economic strength, and a little bit of trust.
So, what kind of things would make people start looking for other? Like, what's going on that's making investors nervous?
Well, a part of it circles back to the current administration and their trade policies. Specifically, President Trump's tariffs are throwing a wrench into everything. You see, traditionally, tariffs strengthen your currency. Why? Because they make imports more expensive, so people buy domestic goods. But that's not what we are seeing. The dollar is falling despite the tariff.
That doesn't make sense. Shouldn't it be the opposite?
Exactly. It's baffling economists. And the market is reacting like crazy. Stocks and bonds are both down, which is unsettling. It reminds me of my time investing in emerging markets back in the late 90s. You rarely saw both assets tanking together like that unless there was a real crisis brewing. That's what's happening here, folks. A simultaneous sell-off in U.S. stocks and bonds. It's like a double whammy.
Oh, wow, that sounds bad. So, this privilege they talk about, is that just fancy economic jargon? What does the dollar actually do that makes it so special?
Exorbitant privilege is a fantastic term coined by Valéry Giscard d'Estaing, a former French president. It basically means the U.S. gets to borrow money at lower rates because everyone wants dollars. Think about it, most global trade is conducted in dollars. Countries need dollars to buy and sell goods. That creates constant demand, keeping the dollar strong and allowing us to finance our massive debt, which, by the way, is currently at 120% of our GDP. That's a big number. A really, really big number. I was talking to a friend who manages a sovereign wealth fund in Abu Dhabi. Last weekend, he said they are starting to diversify out of dollars as a matter of policy. They see the writing on the wall.
120%. That sounds unsustainable. So, if people stop wanting dollars, what happens? Do we just crash?
Not necessarily as crash, but it becomes much more expensive to borrow money. Interest rates would rise, think higher mortgages, car loans, and even the cost of funding our national debt. It could also lead to inflation because imports become more expensive. And then there's the geopolitical angle. The dollar's dominance gives us leverage over other countries. We can impose sanctions, restrict access to financial systems. Without that power, well, things get a lot more complicated. Remember Venezuela, Iran, Russia. They are all feeling the pinch of being locked out of the dollar system.
Oh, I see. That makes sense. So China is trying to step in and offer an alternative with yuan. Is that what this article says about striking deals in yuan?
Precisely. They've been quietly building alternatives for years, trade agreements denominated in yuan, loans to countries desperate for funding. It's a slow burn, but an deliberate strategy. And don't forget Bitcoin. Larry Fink from BlackRock even suggested that if we keep racking up debt, people might start looking at cryptocurrencies as a safe haven. Can you believe it? Bitcoin challenging the dollar is wild. He is not wrong though.
Wow, this is all really eye-opening. I had no idea so much was riding on the strength of the dollar. But wait, what about the tourists? The article mentioned something about American tourists in Europe.
Ah, yes, that's a funny little side effect. A strong dollar means your money goes further when you travel abroad. It was getting to the point where it was cheaper for an American to fly to Europe to ski than go to a resort 2 hours from home. Now, as the dollar weakens, those vacations get more expensive. The price of everything French wine and South Korean electronics are going up because our currency is worth less.
Well, that's one way to curb my shopping habits then, I guess. It's just, it feels like there's so much uncertainty right now. Like President Trump is deliberately stirring things up.
Look, you want to talk unpredictable? This guy is a matter of disruption. Believe me, folks, these tariffs are going to be HUGE, the biggest tariffs you've ever seen. Everybody agrees. But unpredictability is what's really shaking things up. Experts say it creates instability and makes investors nervous. And let me tell you something, investors hate uncertainty. It's like gambling in a china shop.
So, what do you think will happen? Will the dollar lose its reserve status completely? Is this just a temporary blip?
I don't think we'll see a sudden collapse anytime soon. More likely, it's a gradual erosion of trust. But that erosion could have serious consequences. The key thing to watch is whether other countries continue to build alternatives to yuan, digital currencies. If they do, and if the U.S. continues down this path of fiscal irresponsibility and trade wars, we could see a real shift in the global economic landscape. It's going to be interesting times, that's for sure.
Wow, that gives me a plot to think about. It's definitely more complicated than I realized. Thanks for breaking all of this down. You always make these things so much clearer. I have a feeling I need to start reading the financial news a little more closely now.